Hi, I'm Sylvester and welcome to Funding Your Business. Are you a business owner with questions about small business loans? And have you taken out a loan with terms you can't fully understand? Well, you're not alone, and in this forum we're going to take a look at questions from real business owners just like yourself, break down the best responses, and of course give our own take so you can have a better understanding on small business loans and master the art of using debt to grow your business. Let's get into this shugula bugula. I love doing that. Anyway, so our question today in the forum comes from Elder Barry T. His question is more about best small business loan with bad credit. He says, "Hey guys, I just wanted to know if anyone had advice for me. I've had my small business for a few years now and I'm ready to expand. My personal credit is absolutely terrible, but my business credit is a B. What options do I have for my small business lending that won't look at my personal credit? Thanks." So I will take a look at some of the best responses, and of course, if you have any suggestions or ideas, feel free to go down in the comment section below and also give us your own thought process. If you're a guru or you work in the same industry or space, feel free to contribute. Thanks. So one of the first things that I want to know in some of the answers that we're getting is, from my opinion, with the internet, too much information gets you misinformed. Very little information gets you uninformed. So you have to find the right information to be well informed. So I'm reading a lot of things here saying that regardless of how well the business is doing, if your personal credit is still bad, then you are still a credit risk. Greater the risk, greater the cost of capital, and more stringent loan criteria. Yes, it's true to some point, but part of it is not true in that a credit score by itself does not really determine whether or not you're a high risk. More so things like your history, like whether you defaulted in payments, and most likely the industry you're in. That will give us an idea whether or not you're high risk and you're worthy of getting money from a lender, not just your credit score. Your credit score kind of just tells us whether or not you're responsible with money and you're living within your means. And that's why you find people earning up to $36,000 a year with a perfect credit score as compared to somebody who has $1 million with a very bad credit, meaning that they're living way above their means. Because if you're living within your means, you're able to pay every single bill when the time is due. But if you're living above your means, that means that there's times you're missing payments here, there are times you're missing payments there, and that doesn't really tell us whether or not you're high risk. It just tells us that you're not really responsible when it comes to money. Like somebody with a logistic company that has one truck and has a credit score of 830 is of a higher risk with somebody with maybe 3 chain restaurants and has a credit score of 500, if you get what I mean. Because with the logistic company, once that truck breaks down, that's it, it's a wrap. So you're a high risk to us just basically because of the industry you're in. Your credit score will not really save you. So I just wanted to point that out and make sure that, just because you have a bad credit score doesn't mean the bank sees you as like a big risk and that you cannot apply for a loan. You can still apply for a loan. It's just that now you'll have higher interest rates because now we can see the type of habits you have. That doesn't really give us the level of confidence that we have room to come in and get payments from you because now you're already overspending. The other best response that I like to is from Akil Cashflow. It says, "Do you have outstanding receivables you could sell to accelerate your cash? Have you considered factoring?" So this is also another form of alternative lending. So with alternative lending, we have different types from cash advances, term loans, lines of credit, invoice factoring. So those are the main types of alternative lending that actually use your business as leverage to acquire working capital, where we look at your cash flows, we look at your years in business and how healthy your business bank account is and how responsible you are with the money in it. Then we can have an underwriter look at it and maybe look at a position to come in and offer money knowing that we have payments that we can take out without really hurting your business. Because with lenders, there's people who are trying to eat off you and there's people who are trying to eat with you. And then the final response that actually makes sense is expanding your business is an exciting step, since your business credit is B, and we didn't talk really about business credit. So with the business credit, what we have is the Dun and Bradstreet number. We'll talk about that later in the future videos, but business credit score ranges from 1 to 100, with 80 being actually a very, very good score. When it comes to the lettering system, it's just like your grades. Yeah, A is an awesome grade, a B is a good grade, and like with the B credit, you have maybe little dings here and there, but it's still good enough for you to acquire working capital and be offered access to funds. With C, you're kind of in between and fair, and you might struggle to convince a lender to work with you. And a D is just like doodle. You know what I mean? It's doodle credit score. You have to fix that. So let's go back to the question, and I'll give my own take as we usually do, so we can have the key takeouts from this question. First of all, they have a personal credit that it's absolutely terrible. They're saying they're ready to expand. You are your business. So if your personal credit is not really good, 9 out of 10 times you're assuming that you're ready to expand. Now, how are you expanding into a big business with a bad credit score? Now you're limiting yourself to whatever resources that you might get or funds that you might get, but with high interest. That means you're not really ready. Your business is not really ready. If you have a bad credit score, you're not ready to expand. You have to fix your credit first and then be ready to expand. Unless the opportunity that you're coming across warrants you borrowing money because the turnover is big enough for you to make a profit to not only pay the principal but the high interest rate. But even during that time, you're encouraged by all means to fix your credit score so that you're able to access better finance programs that have very low interest rates. But him asking about options, we've already said that there's alternative lending. There's two types of lending actually. There's the traditional loans and there's the alternative lending. With the alternative lending, if one of the guys here said invoice factoring, if he has outstanding invoices out there, he can use that. If he has a very good gross revenue every month, probably maybe 50,000 and above, and he's been in business for a few years, he already qualifies. If he has a very good cash flow where you're raking in maybe 50,000, 10,000, but it's consistent, he can use that to leverage his business to acquire working capital, and that's the cash advance. With the cash advance, it's your future transactions at a current discount. So we have also the term loans and the lines of credit, which are also alternative lending. But the warning here is that with a bad credit, regardless, you're going to get high interest rates. So I don't believe there's any problem that's in any type of business that's big enough to warrant you to take a loan with high interest, because that's just suffocating yourself. That's making your business unstable. First of all, fix your personal credit. Even with the good business credit, some lenders will look at it as this is a guy with a bad habit. So as much as you're saying you're ready, I believe you're not until your personal credit is good. But if the opportunity you're having to expand your business is greater and has a bigger turnover to the point that even an interest rate of 25% will be nothing, then by all means, I believe there's cash advances, there's invoice factoring, there's term loans, there's lines of credit. And I can give an example of one again of people who will borrow 10,000 but have a turnover of 5,000. So that's 50%. So even if somebody's charging you 20%, you're still in the money. So to cap this, or like to put a close to this, I'd say there's cash advances, there's term loans, there's lines of credit, there's invoice factoring, but still you're not ready until your personal credit is good, because now you don't want to go and start creating big businesses and missing out on opportunities, because now the interest is way higher than what you're going to end up making. And with that said, if you have any other questions, if you have suggestions, please leave them in the comment section below, and I'll see you in the next one.